A warm welcome to Enlabs.
Thank you.
And with that, I'll leave the floor with you guys.
All right. Thank you. So welcome to today's presentation of Enlabs, formerly known as Nordic Leisure, but no more. This is basically a recap of our fourth quarter presentation, but probably with a little bit more flavor to it, depending on current state. So let's get into it to start with. My name is Robert Andersson. I'm the CEO. I've been so since April last year. Before that, I was the CEO of Catena Media. And with me, I have George.
Hi, everyone. My name is George. I'm with the company for 1.5 years now and previously worked in EY Audit.
Yep. So let's dig into it, to our quarter. When I joined, this company was a company very focused on building its own technology, almost for technology's sake. And it started to show in a decline in revenues. But we've managed to turn that around with shifting the focus really clearly towards our customers, the customers first. Clearly, our technology is a tool to deliver, but we need to focus on the people using the platform as well. And with this, we have been able to deliver a record quarter of 8.9 million euros. What's happened is that we are going through and continue to go through a big change program within the company, and hopefully you are going to see that this keeps paying off in the future. If we look at the quarter itself, we delivered some really nice numbers, but this kind of discussion that's going on here in Sweden with the implications of the tax revenues, etc., we don't have it at all. Our predominant market is the Baltics, and I will get into that, but that means that we have already 92%, which is sustainable revenues, or you want to call it already taxed revenues, or whatever you want to call it. We have an increase in deposits with 43%, up of active customers, up EBITDA margin of 32%. Worth mentioning maybe is that our mobile revenue is 54%. I'd say from a technology point, the user behavior is running a little bit behind the Nordics in the Baltics, but we say that this shift is really happening, and we are there, so that we now have 54%. So now I'm going to get into some soft values. Maybe this is not something that is too common in a presentation like this, but I still think, and I'm personally passionate about company culture and how to kind of build a company. So Nordic Leisure has a heritage that we kind of wanted to get rid of. And Nordic Leisure was also more of a holding company and owned several different companies, I think even quite many companies. And there was very little to none synergies between these companies. So there was like 3 different companies on the media side, differences within even the gaming sector with Best Bet, and we had then Lithuanian Gaming operating the OptiBet brands. So what we have done is we have unified this under one common brand to build one common culture, and also to be able to speak to investors under one single identity, basically. And what we did is that we changed names now to Enlabs. It's short for Entertainment Laboratories, but it also clearly has a heritage because, as you probably know in here, our share price ticker is NLAB, and people used to already say Enlab before we even changed the name. So it's a little bit of a play with actually our share ticker to transition this into the future. But that's just the name. So what do we want to achieve here? Well, of course, our vision is to basically provide the full gaming chain, because that's what we already have inside as well, but we of course need to execute on this as well. But the full value chain means that we have already a media department, we have a very strong gaming. I just don't want, actually it says, the thing is that why we talk about gaming is that we just don't have iGaming. We have actually land-based operations in the Baltics as well. And then, of course, we want to grow in regulated or soon-to-be regulated markets. Also, you say this in every presentation, I guess, but through organic growth and acquisitions. But our mission is to spark change, infuse joy, and create entertainment. And I want to get into that a little bit. Because this is actually important when we go forward, how the people we hire, what they fail, how they think. So we are really working hard at this transformation program from all these different companies under Nordic Leisure into this one entity that's really passionate about this entity. So what we do is we create entertainment, and with that comes a set of values as well. So for example, you know, the thrill, the fun, but also the fact that it should be fair, right? It's not fun if it's not fair. So we want to make sure that, you know, we do this in the best way possible also for our users. It's an ecosystem where everybody needs to enjoy themselves because it's entertainment. And of course, with that, we infuse joy, of course, for our customers, but also we infuse joy within our corporate culture, make sure our staff is happy. That brings passion into it. But most importantly, we want to spark change. And I think change is a really important word. A lot, you know, people talk about innovation, but sometimes I would challenge that and say innovation is not great. If you're the first, there is no market for it potentially, right? You were the first to make VR goggles. I mean, they are not making any money at the moment. But what you need to be able to have in your company is an adaptability to be able to change to the world around you. That can be on macro level or micro level, and really understand that if we don't change, we die. So that is something that we are really bringing into the company. So with all of this softness out of the way, a little bit of more concrete stuff. So to start with, our core market is the Baltics. I will get into that a little bit more in detail later. But we have offices in Tallinn, in Riga, and in Vilnius, as well as Malta and Spain, as well as one office here in Stockholm that's predominantly here because we are listed here. We have our own technology platform, which makes us be able to have high margins. We have about 195 staff, where about 95 of these is actually people working within the physical shops, so in registers and behind the counter, basically. We have a good brand portfolio. I will show you this later. And we have 3 sections. We have gaming, media, and solutions. I will talk a bit more about that as well. So, driving our own future. This is actually exactly what I talked a little bit about when it's about having the full value chain. So we can go from media into our brands and also the solution side of things. And that the fact that we have our own technology platform puts us in the driver's seat. We decide where it goes. We are not dependent on a third-party platform provider to decide how we should change and adapt. So that's really important to us. So we are driving our own future. Looking at our markets and our licenses a little bit more in detail, Baltics especially is our core. Internally, we say that our market is Baltics and beyond. So looking at Estonia, it has about a market of 170 million, Latvia 350 million, and Lithuania 500 million. The interesting part here is actually the amount of licenses that exist. In Estonia, you have a license system which is more similar to Malta. It's like pan-European in that sense. It's quite easy to acquire it compared to what you have in Latvia and Lithuania. So in Lithuania, for example, there's only 6 licenses. And you need to have at least 20 physical betting shops in order to even get to apply to have an online license. So the barrier of entry is tremendous. You need to first open up and find 20 locations, make sure you have your brand there in a store, and then you can apply for an online license, right? So that's a significantly high barrier of entry. In Latvia, you need to have at least 1.4 million euros in capital to even think about it, to getting started. And with that also comes that there is a complete ban on advertisement around gambling and betting and casino. So, if you don't already have the brand awareness in Latvia, it's going to be hard. We have actually 53% of the market share in Latvia. We are by far the biggest brand. Everyone knows us. Which is, of course, a very fortunate position to be in. And then you look at the other side. If you think about this, we like to call this Fort Baltics. On the other side, you have Malta, quite easy to get the license. You have about 600 licenses. In the UK, over 2,500 licenses. And of course, here in Sweden, which we also have a license in now, there is some, I don't know, what did Mikael say, 68 licenses or something? I haven't kept track. Anyway, we did apply for a license in Sweden, mainly because we believe that the Swedish regulation is interesting. We didn't want to, be sidelined in any way. So we decided, even though we don't have any business here, we decided to proactively apply for a license so that we could act and can act if we want to. So now we are seeing how this all plays out, and if we want to enter quickly, we can. If we want to acquire a company that's not doing so well and put it on our own platform, we can. So this gives us a lot of opportunity, and the actual application cost is not very expensive. So it's well worth doing that and being ready, and we're going to see how that plays out. I think the main thing that happened for us in Q4 was the Lithuanian launch. The Lithuanian launch is for us, since we really have this, we want to be #1 in Baltics and beyond. That means that we need to be #1 in Baltics to start with. Latvia we are in Q4, we are #2 in Estonia. We overtook Betsson, or in their brand that they have there is actually BetSafe, but it's Betsson, so we overtook them in Q4, which is really nice. Now only 1 to go, and then we're on top there. And of course, now we just launched in Lithuania. It's a slow and incremental launch, which means we do not want to burn marketing money without seeing return on investment. So it's about spending, seeing return, spending more, seeing the right return, so constantly tweaking, and we're kind of snowballing this launch. And I am really happy with the trajectory at the moment. With that said, it's not like making us rich day one, but this is how it should be. But we're also not burning 50 million euros in a launch campaign. So we're going to get there. Took a while with Estonia, it got there. It's going to take a while with Lithuania, and it will get there. Simple as that. Looking at the company and the 3 legs, we have Enlabs brands, Enlabs media, and Enlabs solution. Whereas the brands is where we have the gaming. That's the majority of our revenue. We have a clear market focus. We have a multi-brand strategy, as we have several brands. Multi-product, which means that we have many different product verticals, live betting, live casino, everything basically. We also have it on our own platform, as I mentioned before. We have the media segment. This is now something that I think we can see the biggest and quickest wins, at least from inside. Maybe it's not visible in the numbers yet, but we really can see the biggest change of the introduction of Enlabs in our media, because there was quite a few different small companies that we combined into one media entity, which is a significant change. We are also introducing and have introduced what I would like to call a AAA brand. I will get to that later. And with our solutions, it's untapped potential. We have sold 1 instance of our software to a partnership in Africa, but that's because they are so land-based as well. So you need the land-based component, and that's why it fitted so well to use our software there. It's not a big business, but it also shows us that we can make a big business of it. So we kind of broke that out and formed its own vertical so that it gets its own justification of being. We are just now setting, strategy forward, how to deal with this, and later on staff up this area. So at the moment, there is no real business in it, but it certainly has a major opportunity going forward. So the brand portfolio mainly, as I said, consists of our OptiBet brand in the Baltics. It's a very, very strong household brand, and that will continue to be so. But we also have all the different best brands. We have also something called Gold Club Casino. And within media, we have a lot of different brands, which is necessarily not those that strong. And then, as I said, we have in solutions, we have the Primabet partnership. But interestingly enough, we kind of saw that from an affiliate point of view, we have 2 really strong brands in our gaming portfolio. That doesn't make that much money, but the potential of transforming them into media brands, into the media is phenomenal, because Best Casino, as is, ranks really high, even as it was a really old platform, bad offering, everything. And when people Google best casino, believe it or not, they're not searching for our product. They're actually searching for the best casino. It's very logical. So we just really strengthened that and rechanged it into an affiliate site, and we launched it a couple of weeks ago. And early indications I'm very, very happy about. It's too early to pop the champagne open, but it really feels like that was a really smart move. So yeah, it ranks tremendously well. And what's really interesting to say that when you change out the content to be more and more relevant, it ranks even better. Now it's starting to rank on good casino as well, not just best casino. So Google is quite smart like that. All right, so growth strategy. Obviously, we want to drive organic growth through current and new products, geographical expansion, but also be an active part in the consolidation in the industry. We've talked about it in a few presentations here before. I also do believe that consolidation will happen and needs to happen in this industry for profitability to remain. However that happens, I don't know, but I do believe that consolidation is in the cards for over the next couple of years. With that, just gonna end off with our financial goals, which is basically that we're gonna make 20 million euros EBITDA in 2020. But I think we put our chin out a little bit and say that we're also gonna do that with a 40% EPS growth annually. So that means that we dare to say that we are gonna deliver strong shareholder value over the next couple of years. And with that, I hand it off to you, George.
Thank you very much, Robert. Everyone, hi once again. Now we take a look at our financials. We start with Enlabs' consolidated performance. In the fourth quarter, we hit all-time highs in terms of revenues and also EBITDA. We organically grew during the quarter 18%, if we compare to Q3, and our annualized 2018 growth compared to 2017 has been 30%. We also continue to maintain very high operating profitability in our business with an EBITDA margin once again north of 30%. In absolute terms, in Q4 our EBITDA increased by 400,000 euros, corresponding to a 15% increase quarter to quarter, while the annual EBITDA amounted to 9.4 million euros, an increase of 40% year on year. Delivering shareholder value is one of our core objectives. Here on the chart we can see our earnings per share dynamics over the last 8 quarters. In Q4 our EPS increased 16% quarter to quarter, while the annualized EPS growth in 2018 has been 45%. And as we just looked at the 2020 target statement, we aim to achieve at least 40% annualized EPS growth during the period, and we have successfully started delivering on that in 2018. Also, the trend line on the chart very clearly illustrates the momentum we have in our business. On this slide, I want to guide you through our cost categories and their dynamics over time. On the chart, costs are expressed as percentages of revenue, and EBITDA at the top serves as a resulting factor. In Q4, our EBITDA margin was 32%, 1 percentage point down from Q3. The share of marketing costs increased to 15%, with marketing costs being the core driver behind the increase in sales. At the same time, we benefited from the scaling effects in our fixed costs, namely personnel cost share decreased by 0.5 percentage points and other business costs decreased by 0.6 percentage points. During Q4, we didn't see any significant changes in the proportions of cost of sales or gaming taxes. Here I want to remind you that 92% of our gaming revenues are coming from regulated markets, which means that they are taxed, and the weighted average tax rate which we pay on our gaming revenues is approximately 10%. We also have relatively low marketing cost share at 15%. This is due to the strong brand awareness we have in the Baltics and also due to the various regulatory restrictions to advertising in the region. And we still in our business have quite high fixed cost share. If you sum up personnel costs and other business costs, it will be 26%. And this only highlights how big of a scaling benefit we have ahead of us. So in summary, we really can continue increasing our marketing investment, we can continue growing, and with that we can also continue to maintain very high business profitability. Now let's look at our segment performance. We start with our gaming business, which contributes 90% of group total revenues. On the chart, we can see gaming revenue, EBITDA, and EBITDA margin development. And I'm happy to say that in Q4, once again, we had record quarter in all three KPIs. And year 2018 has been record for us in all three KPIs. And moreover, all the development which you see here has been 100% organic. In Q4, our revenues increased 22% compared to Q3, while the annual revenue growth has been 31%. At the same time, our EBITDA increased 24% quarter to quarter and 53% for the full year. We also recorded our highest ever EBITDA margin at 33%. In October, we launched Lithuanian iGaming operations, which Robert mentioned. These are now in an investment stage, and they are being funded from profits from the neighboring markets. And also worth noticing that our gaming business is very well diversified in terms of product verticals, and in Q4 we saw growth in all the product verticals. Looking at underlying gaming business KPIs, namely active customer count and deposits, once again we see a very positive trend. Our active customer count increased 4% quarter to quarter and 18% year over year. If we subsegment that 18% increase year on year, we would see that in the Baltics, which once again are our core markets, the increase in activity was 29%, while in our .com markets the increase was very flat. Deposit amount increased 14% quarter to quarter and 43% for the full year. And now it has been almost a year since we announced the change of mindset in the company towards being customer first. And we clearly now can see the results leading to an increased customer engagement and higher retention rates. A testament to that is an average monthly customer deposit amount increase from 75 euros to 97 euros during the year, corresponding to an increase of 30%. Looking at our media segment, which contributes 9% of group total revenues, here we can see the turnaround is in progress. We have now a new team at the head of operations with the vision of media being a single entity, rather various set of assets around the consolidation group. In Q4, we saw a 12% decline in revenues and a reduction in EBITDA by 39%. In absolute terms, our EBITDA decreased 150,000 euros. The explanation for decrease in EBITDA is accelerated investment. We see very high growth in new depositing customers, but these NDCs have yet to result in the new revenues. With that, we believe that turnaround still will take time, but we are very confident that we have the valuable assets in this business segment and the right team to execute this change. And here the summary of our cash flow and balance sheet statements. Our operating cash flow for the quarter amounted to 3.2 million euros compared to 2.9 million euros in EBITDA, once again highlighting that our profits are cash-based without any artificial inflation. Investment cash flow has been 0.5 million euros. This is the money we spend on development of in-house gaming platform, which is now live in Lithuania. At the end of the year, we had the cash balance of 11.2 million euros, corresponding to 31% of our total assets. We are completely debt-free. We have no bonds, no borrowings, no loans, and we have a very strong equity asset ratio at 88.5%. With that, Robert, back to you.
So let's just quickly wrap it up. Baltics, high barriers of entry. I have explained why. Well, I'd say we only have a positive impact, if any, from the Swedish regulation, because that means that we either we choose to enter Sweden because we see the opportunity, or we don't, and then business as usual, basically. We have like George said, we are debt-free, which is awesome. Strong cost control remains. Of course, when we were in decline, it's quite, you have to keep it tight, but we continue to keeping it tight even though we now grow. And we have full control over our technology, so we are driving our own future. Going forward, our aim together with all the employees is to really build a world-class company and a world-class culture, something that we are working very hard on at the moment. Increased group synergies goes without saying. We are seeing the start of it now. There's a long road ahead still. and focus on growth. We want to do so always profitable though, and of course in the very end, but next step is to deliver on our 2020 targets that we set out for ourselves. With that, I think it's Q&A.
Yes. Unfortunately, we're running out of time here, but just a quick question.
Sorry.
The Baltics is perhaps a market that not that many people are familiar with in terms of the underlying market growth and also the long-term potential. Could you give us some sort of flavor in that regard?
I mean, the market is just, it's running slightly behind the Nordics in the sense of online adoption at the moment. So it's growing really fast at the moment. If I'm correct, it's been growing almost 40% annually. In the last 3 years. So a lot, and there's still a lot of growth ahead.
And you also mentioned the high barriers of entry. Do you see this competitive landscape change over time with new entrants, or do you remain confident that you will remain the market leader?
I mean, you should never get lazy and sit on a high horse, right? Competition will try. It's an attractive market, so you just need to constantly stay on your feet. There's a lot of other talented companies out there, and we're just gonna keep at it, doing the best we can to either defend or, climb the ladder, so to say.
Got you. Thank you very much.
Thank you.